are we here?
So when you and I were together on January 6th, I said you have to understand the difference between earnings and revenue and stock price. Okay? And what's happened in software is hard for people to get their head around because the stocks have been cut in half. But that's not what the market is discounting, Scott. The market is looking into the future and saying, in the past, 3 years ago, I could buy 35 years worth of Salesforce's free cash flow into the future. Give them 35 times free cash flow because I had that level of predictability. It was like a government bond. It was a sure thing. You definitely were going to get those. And then we have AI do what AI's done over the course of the last several months. And people just said something very rational. I can't see as far into the future. So I'm going to pay less for the terminal value. I'm going to pay less for those future free cash flows. I'm not penalizing them because they're missing their numbers today. I'm just putting it in the too hard bucket because I can't predict those future numbers. So the only way that reverses, Scott, is those companies have to accelerate their core revenues and show that they are beneficiaries of AI. The companies that do that, Databricks is accelerating their core revenues. I think this quarter they grew over 60%. Snowflake, ClickHouse, these are companies that are accelerating their core revenues because AI relies on them. I think they'll do fine, but application software where I can't see into the future, they're going to have lower multiples.